The long-term performance of capital expenditure from a fundamental perspective, evidence from Indonesia. This article is written by two authors. First author Hendrikistianus. Second author Juniarti. Contribution and originality of the study is that, this study utilizes the earnings persistence concept to measure the impact of capital expenditure on firms' long-term financial performance. Fundamental measurements are used to identify the impact of capital expenditure on long-term performance as the internal perspective of firm performance, which previous studies have not used. This study aims to identify the effect of capital expenditure on the long-term performance on companies listed on the Indonesia Stock Exchange, IDX. Fundamental measurements were used as the internal perspective of performance. This study also tries to fill the gap due to the lack of studies that discuss capital expenditure in Indonesia by providing empirical evidence regarding capital expenditure in the context of Indonesia's stock market. Capital expenditure is represented by the growth of fixed assets for the current period. The long-term performance utilizes earnings persistence and is measured using the regression of ROA and ROE for the past 6 years, and then the coefficients are determined using the lags of ROA and ROE in the 3 years after capital expenditure. The sample comprises 60 big-cap companies listed on the IDX at the beginning of the sample period, in 2016, and for 4 years of the sampling period, 2016 to 2019, with a total of 240 observations. The companies sampled should fulfill the criteria of having complete financial data for the 6 years before the sampling period. The hypothesis testing proves that capital expenditure impacts long-term performance, with no evidence to the contrary. Additional testing utilizing the control variables generated additional interesting results with important implications. Thanks for watching this video of Asian Economic and Financial Review Volume 12, Issue Number 12.